You know, you and I follow each other on Twitter. We see the commentary there. Is it surprising at all for you that post Evergrande, post what we saw on Monday, that the markets could actually be trying to take a leg higher right now?
Yeah, not at all. I mean, if you review what's happened recently, is I think this pullback is normal. I think it's part of the seasonal weakness from about mid-September until mid-October. The market is traditionally weak. You have a lot of factors such as index rebalancing, end of the quarter, portfolio adjustments, government fiscal year end, the debt ceiling, and all. The news cycle tends to shift away from fundamentals. So it's actually pretty normal to see this pullback during this seasonally weak time. But coming out of this from the second half of October into November and December, which are two traditionally strong months, I think the news cycle will start to shift towards fundamentals. A lot of the FANG stocks will be reporting earnings soon, and we can start to focus a little bit more on the fundamentals and shift into a seasonally favorable time for the markets.
You know, Joseph, there used to be a time when we talked about pullbacks, and pullbacks meant like, 8, 9, 10, 12, 15% sometimes, maybe even more. We haven't really seen that for a while now, certainly not the 10 to 15 to 20% variety. Is it worrisome at all that when we see pullbacks now, the pullbacks are maybe 3 to 5%, and that's about as deep as it goes?
Yeah, that's a great point. I think the liquidity provided into the system with all the sector rotation, where money is constantly rotating from when they sell off tech, it rotates into energy or financials. And I've noticed that the S&P corrects, let's say 3 to 5%, but a lot of growth stocks do correct greater than that. When you look at a lot of the average stocks, they are down double digits from their highs. But I think a lot of the liquidity that the Fed is providing is keeping that sector rotation alive. And speaking of the Fed, they meet every 6 weeks. Their next meeting is scheduled in early November, and I don't see them rattling the markets at all. They'll announce their taper schedule that they're going to reduce the 120 billion in bond buying that started at the beginning of the pandemic, but I don't see that starting until 2022. And interest rates they're not going to touch for a while. So I think that liquidity that you're talking about that keeps the market propped up, the Fed will continue to provide that equity-friendly environment.
I'm glad you brought that up because obviously with the jobs, number coming out today, liquidity, Fed policy is certainly in focus here. For a lot of folks out there, it's going to take a lot in terms of a jobs number, either huge gains or very disappointing numbers to really move the market or the Fed perhaps from its policy right now. But is there any possible way that the Fed could misstep in the next 6 months to 2 years, given the fact that everybody kind of knows what's going to happen in that time frame?
Yeah, that's a great question. I think that they've made it clear that they would rather be late than early. There's no question a lot of the economic numbers are back to normal or even trending above normal prior to the pandemic, but they want to make sure that the economy recovers. And I think they are going to, if the analogy is peel the Band-Aid off slowly rather than just rip it off with the market. So I think they are okay knowing that they're going to be late and will continue to provide an equity-friendly environment. And on top of that, the technicals are showing a lot of stocks that had great gains earlier this year are consolidating those gains. And again, could be setting up for a strong fourth quarter during a seasonally strong time.
All right, Joe, we got just a couple seconds left here. Any favorite part of the market or a stock that you like?
I'm big on software. I'm a growth manager. I like software, semiconductors. The only thing I'll say is we just need to be patient until we get through this seasonally weak time, but we're heading into a favorable period in the late fourth quarter.